The ongoing geopolitical tension between Russia and the West has escalated into a fierce economic confrontation. The West, led by the European Union and the United States, has imposed a series of sanctions on Russia, resulting in the freezing of assets worth hundreds of billions of dollars. In retaliation, Russia has taken drastic measures, including seizing Western assets, imposing exit taxes, and enforcing restrictions on the withdrawal of profits by foreign companies operating in its territory. This economic standoff raises questions about whether this is the beginning of a new economic war or a prelude to a global restructuring of the world order. Reports suggest that the West risks losing over $300 billion if the frozen Russian assets are confiscated. This raises doubts about whether the sanctions imposed by Western nations were a strategic mistake. Russia has not only responded with countermeasures but has also taken the conflict further, targeting Western businesses and assets. For instance, Russia has seized assets belonging to American and European banks and has implemented policies that have severely impacted foreign companies in the Russian market. In December 2024, the European Union introduced its 15th package of sanctions against Russia, aiming to isolate the country economically and politically. However, Russia's response was swift and impactful. It introduced measures to seize Western assets within its borders, targeting foreign companies with significant financial losses. Russia also raised the exit tax on foreign businesses from 15% to 35% in October 2024, further tightening the financial noose on departing corporations. Western countries, on the other hand, have frozen approximately $300 billion in Russian assets, including $207 billion in European banks, $67 billion in American banks, and additional sums in banks in the UK, Canada, and Australia. These frozen funds, which include central bank reserves and personal assets of Russian oligarchs, have been confiscated and coordinated under a task force called REPO, Russian elite proxies and oligarchs. Luxury properties, yachts, and private jets owned by Russian elites have also been seized, contributing to the West's economic pressure on Russia. Despite these actions, Russia has shown resilience. In July 2024, it passed a decree legalizing the seizure of Western assets within its borders. This included assets spread across multiple sectors, making their confiscation a complex yet achievable task. By enforcing restrictions on profit repatriation and requiring companies to sell their assets at a loss, Russia has created significant challenges for foreign corporations. For example, companies like Carlsberg and Danone have faced immense financial losses due to forced sales and government controls. Carlsberg had to sell its assets at a large discount, while Danone's Russian operations were transferred to a local entrepreneur. Other Western corporations, such as Pepsi, Coca-Cola, ExxonMobil, and Ford, have also faced severe restrictions, impacting their ability to withdraw profits or operate freely in Russia. This has led to financial difficulties and forced changes in their global strategies. The sanctions and countermeasures have disrupted supply chains, reduced foreign investment, and created economic uncertainty. Russia has focused on self-sufficiency and reducing dependence on foreign investment, which has far-reaching implications for the global economy. While these measures have helped Russia adapt to Western sanctions, they have also increased geopolitical isolation and could potentially lead to long-term stagnation in certain sectors. The confrontation between Russia and the West has escalated to a new level, with each side imposing measures that harm their respective economies. Western nations, despite their coordinated actions, have underestimated Russia's ability to adapt and respond. Russia's strategy of leveraging domestic markets and imposing financial penalties on foreign companies has helped it maintain economic stability in the face of global challenges. The situation has turned into a cycle of mutual retaliation, where both sides suffer significant losses. Western companies that have operated in Russia for decades now face substantial financial setbacks, while the Russian economy remains under pressure from sanctions. The global repercussions of this conflict are evident, with decreased business confidence and disrupted international markets. Despite the escalating tensions, a potential resolution remains uncertain. The lifting of sanctions may only occur through future negotiations aimed at achieving a peaceful settlement. Experts predict that such discussions could take years, with any significant changes unlikely before 2025. In the meantime, the conflict continues to harm both sides, with no clear winner in sight. This prolonged economic tug-of-war highlights the need for dialogue and compromise. The current approach, where sanctions and countermeasures dominate the narrative, risks leading to a dead end. Both sides must consider the broader implications of their actions, including the impact on global stability and their reputations on the world stage. Without meaningful efforts to resolve the conflict, the world may face further economic and political turmoil.